The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at the DAX this morning. And as you can see, it has a slight downward bias, but very slight. If we take a look at the FTSE, these are hourly chart, folks. You can also see that we're in the same type of a downward bias that started around the 7th of August, a couple of weeks ago, so it hasn't really gone very much. Our market's the one that has been the leader of the pack, which has been leading ever since. Now, the thing that I would like to mention, and someone asked me about it, and that's these home building stocks. I really don't do much. Well, that's the understatement of the year. I don't do anything with home building stocks, but occasionally I do watch the lumber market. And I just wanted to show you lumber up here, folks. You can take a look at what's happened to it. It's a very interesting chart. We'll look at a couple of these here. You'll notice that we had a big ABCD pattern that completed there in 2015, and then we had this huge run up, as you can see, into 2018. That's what I'd like to show you here. Is you notice after that high was put in at 647 per square foot on the lumber, you'll notice it came all the way down and touched the high that we made in 2012. That's a really important point, folks, because it also hit it in 2017. I believe that is the market telling you that you're right near the value of lumber when that usually hits. So pay attention to that. But watch this next chart, because you'll notice how the top was made. You can see that 3-drive pattern on the weekly chart. All I'm going to do now is to go to a daily chart and try to show you what it looked like on a daily chart as it was happening. What I did was, let's change it again because it was easier to see on the weekly. All I did was expand the weekly so that you could see it easier on the weekly chart. You'll notice here that you had a bottom in early November of 2017. You had the pullback in the March, and then you had the big run up right near the big top, and then the pullback down into this area. It's not telling us anything at this particular time. And folks, I only know one person that trades lumber. Even Rich Anderson, who trades almost everything, doesn't even trade lumber, but they do trade it at the CME, but I am not involved with it. But it shows you a picture of what the prices of lumber is doing. Whether that has anything to do with Toll Brothers or Beazer or any Pulte, any of those others, I have no idea. I have too much fun looking at these currencies and stuff, and it makes it a whole lot easier, than to try to look around at some of these other things that are happening that I think are relatively important. They're all important, but some are more important than others. I wanted to bring to your attention something here, folks, because we have a real interesting situation here in the euro. I wanted to show you if you remember here, just a couple of days ago, we posted this chart here on the euro with an ABCD structure taking it up near the 116 level. 116 was the actual price level of that ABCD pattern. And of course, when we look at this after it happened, you'll notice that we got right up to 116.19. That was the high of that move. And now we've had a very good, that's pretty close, Mark. Lumber trades by appointment. Actually, the lumber is all commercial, folks. It really is. I don't think there's one single. There's got to be a few speculators in, but it's almost all commercial. Now, you'll notice the move here in the euro. We went from 113 up to 116. That's a $3,000 move in 3 weeks. And, it was basically a proxy for gold, which bottomed pretty much at 1167, rallied $40, and silver, which had a big rally. We'll talk about those in a little bit. But now we want to watch what's happening to the euro right now. You'll notice it had a little bit of a pullback here. And all we're going to do now, and this is what I do for TFNN, is I send out these charts as I see them unfolding. And This is the one that I did last night, and I updated it just a little while ago. In fact, you'll notice here that you'll see that ABCD pattern up there at that 116.20 level. Then you'll notice the ABCD pattern that occurred last night at the 115.40. That was down 80 pips from the high. Also the harmonic number in the euro, and if you want to double check that, go back into August 21st and see what happened. But it was also a perfect 61% retracement off of the 382 on August 21st. Folks, this is actually a very, very bullish chart, on the euro. It's acting extremely bullish, and I know it's caught a lot of people by surprise, but that's what we're looking here. But we'll have to wait and see. Now, when we look at the dollar index, we're at a real critical level here because this is what's happened. You'll notice the dollar index stopped right at that 90 was the low. We're trading at just a tad above 95 right now. That was a 61% retracement off of the July low. It was also a 78% retracement off of the low that we made in late July. So this is what's happening. We're at a really critical level. In fact, every day is a critical level in these markets. And the way the news comes out, who knows what's going to happen. But that's the one that we're watching, very, very closely, because it has so many things that are easy to trade. And the reason why is there's so much volume and so many people trading the euro that it's really hard for it is impossible for anyone to manipulate it for a long period of time. For a short period of time, somebody certainly could, but not for a long period of time. That's the main thing to remind yourself of what you're looking at. Now, Jason talked about the Canadian dollar. I wanted to bring that up because it's just getting ready to take another trip south. You'll notice that we had this really nice 135 pattern that completed last week. That's a perfectly symmetrical 135. From 1 to 3 and 3 to 5 are equal in time. In other words, from high to 1 to high to 3 to high to 5, they're all equal. And each of the retracements is equal. 3 is related to 5 perfectly, and 5 is 61% retracement of 3, and it's also 50% of 0.1. So that's why it's so important. Now, if we break below this low that we had just recently, below that 130 level, we're looking at a move coming down to the 127.50 level, which would be a 61% retracement. So these patterns don't work all the time, but when they do give you some indication of what your risk is going to be and what areas you're going to find relatively important support or resistance. That's the way we sort of look at it. Now, here's where we were in soybeans as we came in to last week. If you'll notice here, just give me 1 second here to get this up here so we can see it. This was where we were Sunday night. We were completing the ABCDs up here at that 78% level, and it was due for a retracement. And in fact, we did get the retracement. And as we put this up here, you'll see that we were looking for the market to come down to that 61% retracement down there around 870. And we got down to 863. We've hit the 78% retracement on this move, folks. So anything below 863 and it's soybeans, November soybeans, would not be a good sign. So that's where it is right now. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have a caller from Philadelphia, Pennsylvania. Mr. Z, are you there?
Good morning, Larry.
Good morning to you, my friend.
Terrific day here on the East Coast. How is it your way?
Oh, here on Broad Street in Philadelphia, it's awesome at the offices of Duke & Duke. John, I have a question for you.
Yes.
The thing that I'd like to ask you about is the situation in silver. I happen to be moving my operations into December silver because I've always been that's been one of my best months, and I like it better than September. September's been sort of a maverick month for me, but last night we just hit a 61% retracement down at that 463 an ounce level, rallied a little bit from that level, so that's going to be a key spot to look at. So I posted that into the den, and I was wondering if you concur with what I'm looking at here potentially.
That's funny you mentioned. I am still trading SEP contract, just for what it's worth. The last trading day for options on that September futures contract is next Tuesday, 1:25 p.m. That's when the options on that futures close or cease trading. And it is from that moment in time that the open interest in December becomes greater than September. So you're rolling from SEP to DECE right now. And anybody who is trading silver, including myself, it's a must to do exactly what you've done, that is roll the calculations from SEP to DECE no later than Wednesday morning next week. So just a comment there on the contract month. And as far as price, Larry, it's, you've taught me well, Larry. I've been a student of yours, of course, since 2007 or 8. And so I just implement the tools that you've taught and act accordingly. And, yes, I saw exactly what you saw on the silver. And, in fact, you can go into Tiger TV, or excuse me, the Tiger's Den, and see I posted my trades, which was, I think, at 5:55 a.m., bought the silver at those lows So anyway, so I'm with you on that. Wanted to ask you, as you look at, the daily charts and the 4-hour charts on Silver, Larry, what is it that you can hang your hat on that will tell you that that bottom that occurred back August 16th is in fact a decisive bottom? Where do we need to get up to confirm an uptrend's in force as you see it, please?
Well, John, I would think at least 36 cents, per ounce, and we haven't quite done that yet. We've rallied about 25, I believe. We've rallied $40 in gold, which is a very important spot to pay attention to. Any close above 12.10 now in the gold would trigger that big bottom is in, and I believe that would be close to $5 in the December silver, somewhere in that ballpark. I don't know the exact number, but somewhere in that ballpark is what I'd be looking at.
Excellent. Thank you on that. I am taking the approach of that silver and gold have gotten down low enough that even if they haven't bottomed yet, I'm trading assuming they have and keeping my risk of loss small in the event that they haven't bottomed, just kind of figuring figuring a bottom is closer than further away in time. So we'll just have to wait and see, I guess. Larry, I have to just comment on something I heard you say yesterday. Mm-hmm. You had mentioned how this activity of speculation is an activity that you can do forever. And, of course, you've been doing it for, 5 decades now and still going strong?
Actually, 7 decades, John. 50, started in the 50s, 59.
That's fabulous. And I hope to follow in your footsteps as far as that longevity is concerned. I did want to ask you, Ruth Miller and John Hill, are both those people still involved in the game, as it were?
Oh, John Hill is 92. He's trading very actively, as are his 3 children. We lost Ruth a few years ago at the age of 95. She still had soybean positions on. So, she's a real sweetheart. She changed my life for the better, believe me. I love her dearly, and she was a really, really great lady. In fact, her husband and her son were my 2 largest soybean accounts when I was at Drexel Burnham, so I was, pretty involved with the family my whole life. So, from Terre Haute, Indiana, back in the old days. Anyway,
and just out of curiosity, for historical purposes, her sons, who you had as clients back in the Drexel days, were they actually in the farming business and using it as commercial?
Oh, yeah. Terry passed away at the age of 60. He was a really heavy smoker, and he died of a heart attack very unexpectedly, and it really shook her up quite a bit. Of course, being her only child, of course. But they had 1,900 acres there in south of Terre Haute, which was a lot of acres, and they grew mostly corn. But back in the old days, John, I think you remember that they used to put soybeans in and just till them over just for the nitrogen content before there was, margarine and, paint and all the cosmetics, before we knew all the uses for the soybean plant. So I remember them plowing it over. I remember that very vividly, just to make the corn crop better the next year. People don't remember that, but that actually used to happen.
Larry, so true, yes. Growing soybeans, soybeans is, that plant is known as the quote-unquote nitrogen fixer. And, back in the day, people did actually grow that literally for fertilizer. Exactly.
That's for sure. What else can I help you with, my friend?
Yeah, I wanted to follow up with a question on the bonds and then the stock indices. But first, the bonds. Larry, I had made an observation. This goes all the way back into February and March of 2017, when bonds were finishing a decline phase. And the low occurred right at 147 basis the bond futures contract. And I'm not going to go into the whys and wherefores, but 147 was a mark coming out of some technical studies of mine. And I learned long ago as a trader to do your calculations, use your technical tools, whether you've invented them yourself or whether you've just lifted them from somebody more clever. And in this case, it was my using somebody else's tool, but 147 was a mark, and then watch the market action at a calculation. And lo and behold, back in March of 2017, bonds made a low 147 and then spent 6 months bouncing and chopping higher. So that was helpful to use to cover shorts against back then.
John, let's hold on for the break here, and we'll have you back, okay? We got to pay a few bills.
Sure.
Stay with us, John.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Mr. Z from Philadelphia about the bonds and the importance of that 147 price. Go ahead, Mr. Z, continue.
Yes, to finish that line of thoughts, in January, late January, as bonds were falling from a 154 high, they broke 147, and I was shorting starting Thanksgiving time thereabouts.
Mm-hmm.
And that break of 147 was a very powerful signal for me that I used at that time to hang on to that short position and then ride it lower. And so that turned out to be quite profitable. From the May bottom, after the Italian bond snafu, there was a spike. And lo and behold, I think the spike high, I think the active contract back then was the June bond contract. We got up to 146.5. What do you know? We get up close, but not exceed 147. So I'm assuming, until proven otherwise, that 147 is pivotal, and that movements toward that are likely to be pivot areas. Anyway, that's my observation. My question to you, sir, are we going to get to 147?
Well, John, I posted the chart in here.
I want to know if we're going to get there.
Well, I think we've got a pretty good chance. We're trading pretty close to 146, or at a point and a half away. But if you look at the head and shoulders pattern that I've posted into the room here, that has been in place now for several weeks, it's got every indication that it wants to make that ABCD right up to that 147.5 level is what it looks like. Now, possibility, of course, it might not get there, but right now it's moving in the right direction, if nothing else.
Very good. I'm going to keep my fingers crossed, and of course, if it blows through there by more than a couple of points, that'll assume, or that will signal to me that something much more powerful to the upside is ongoing. So, so much for that. Larry, I did want to segue and ask you a question. You were discussing in detail the euro and the patterns that you see in the trades that you make. So thank you on that. That was all quite complete. The question is I have for you is, as an individual trader, what size increments are you trading in when you're trading in the leveraged cash market? You dealing in blocks of $100,000 worth?
Yes, that's
something else. I'm just curious if you can lend some guidance on that, please.
In foreign exchange, I just used the $100,000 block. I trade a lot of foreign exchange on the Merc because the commissions are so much cheaper, and there's very good liquidity for, pretty good size. As long as you're not trading, over 40 contracts in the currencies, you have no problem, with the liquidity on that. So liquidities in these markets have never been a problem to me, John. I mean, they're pretty good. Back in the old days of Drexel, when I was trading limit positions, it was a lot different. But nowadays, at the old time, as I'm heading for that 8th furlong in a mile race, I have to, just scale it down a little bit and have fun doing it. And that's really what I'm trying to do. I'm not, well, anyway, I just want to, that's just basically how I look at, basically not how much I'm going to make, it's how much money I have at risk at one time. And with currencies, as with everything, you have to be extremely careful because they might change the name of the game like they did in the Swiss franc 5 years ago, and they took out, several FX firms, right away. So that's a key thing to keep in mind. I'm always preaching about that.
Yes, you are. Thank you on that. Since you just make note that you actively trade the Chicago Merc futures contracts, just the follow-up question that occurs to me is, if that's the case, why do you always show the pricing data off which you do your patterns and chart work using the cash market as compared to that physical futures contract?
Because the cash market is more accurate than the futures market. The futures market is like 1/100th of 1% of what the actual real market is. But all I do is I equate to what it is. Like I'm looking at the euro at 116. Yep. And there'll be a premium on it in the euro futures, so I figured out what that premium is, and then I know if it's within a pip or two, I'm able to put that on, because when you trade currencies, they charge you 1 or 2 pips, usually 2 pips. If you do pretty good size, you just trade 1 pip, that's 10 or 12.50, whereas at the Merc you pay $3 in and out. That's a 75% haircut. And if you did 20 trades a month, you're going to save $1,000 a month just by trading at the Merc.
Excellent. That explains it. Thank you on that. Lastly, I wanted to ask, on the stock indices. I know on the S&P, you've documented how multiple ABCD patterns have unfolded up into these highs, the retest of that January 26th high. So that we know. I wanted to ask if you could put up the chart on either the IWM ETF or, alternatively, its sister, the Russell 2000 Equity Futures Contract. That has gone to new highs. I'm wondering from a pattern perspective if there's anything you see in either that Russell 2000 Futures or that IWM that suggests we've reached a price that is completing a pattern that could indicate a short-term high, please.
Well, John, I will be happy to do that. Unfortunately, what I just did is as I was getting ready to put that IWM chart in, I clicked the off button for the Tiger Den, so I'm going to have to log in for just a second. But I wanted to mention this because I'm going to be doing my newsletter this weekend, and those of you that have not subscribed to it or have not seen it, this would be the week to do it, because I'm coming out with some real serious information. I think I'm going to make a serious call here in the markets, because when you're looking at these things as a technician, you're not paying any attention to the fundamentals or the news or anything that's else out there. And John, the only problem that I see here is I don't see any red lights. I mean, all I do is see green lights to the downside, and when I see that, I know I have to be extremely careful, because I know these markets sometimes will go to areas where you don't think they are. Here I put the Russell 2000. As you can see, it's made new highs. We haven't made it in the Dow. We did make it in the S&P. We had a major pattern there, but all these patterns, I mean, every single one. And then when you look at the FANG stocks and all the others, and then there's just so many things. John, back in 1929, in June of 1929, there was a man named Roger Babson. He was equivalent to probably not Warren Buffett, but very, very close. He had a big following, and he was always listed in the newspapers. And in June, he came out with a major cautionary signal in the stock market. That was June of 1929. And for 3 months, they just beat the heck out of him. I mean, they made fun of him. They did everything to try. And he was very successful. And, of course, when it topped on September the 3rd, you saw what happened. Stay with us, John. We'll be right back, okay?
Yep.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back talking with Mr. Z from Philadelphia about the stock market, and we were talking about Roger Babson, who was a big investor back in the 1920s and 30s. He started Babson College, the Babson Institute, that's still going strong. I posted the chart of the Spiral Mirabilis, which is the chambered nautilus, and he was very, very enthralled with this. He had it on a lot of different things, and as a matter of fact, he had bought during the big depression that we had here. Somehow he got the bed, the headboard of Isaac Newton, and Isaac Newton's headboard had this diagram of the chambered nautilus, engraved on the headboard. Now, there were some pictures of it. I had a picture of it at one time, but the bed has since disappeared, and there's just no mention of it anymore. But at one time, this is going back 40 years ago, I remember quite vividly about that. But anyway, that's what Babson did. And of course, what I'm going to do is like what I did in March of 2009. I'm going to call for something that I think is important. And remember, John, I've called 13 of the last 4 recessions. So that's very important to remember. That means about 25% of the time I'm right. But anyway, it doesn't make any difference really, because whether I'm right or wrong, it doesn't, it's just the patterns that I'm looking at. But I've never seen a path that it just is so clear that this is what's happening, and nobody really chats about it. I mean, the overall volume and what's happening in the market, and part of that is due to the ETFs, I'm sure. But if you look at the breadth of the market, it's about as bad as it can possibly get. There's just a lot of different things, and the technical things. It's all technical, nothing to do with fundamentals, no astrology. It's just the patterns that I see everywhere. And, maybe they all fail this time, which they certainly do, but that's what I'm going to be looking at. How about you?
Yeah, I appreciate that. I'm going to ask you, please, to repost that IWM contract that you just had
Sure.
up in the den. It's not there now. I want to look at that
Sure.
again, please.
You betcha. Get it right up here.
And ask you the following question. In looking at your charts, I see multiple butterfly to top pattern possibilities.
Mm-hmm.
I see a price of 171.18 listed on that.
That was yesterday's close?
Yeah, that's right where we are now. Question. You're not recommending a trade. I'm not saying I'm putting on a trade, but if one let me rephrase the question. What is a trade idea, and what is a stop loss we could use in putting on a IWM short sale, given the data that I'm looking at here in Tiger TV?
Okay. First of all, for the 24/7, Fibonacci 24/7, we went short 3 days ago on Monday when it hit 25,850 in the futures. We sold it just a little bit below that. We put a stop at $25,950, so we're risking about $750. If you're going to do the IWM, I would be looking to sell it, and if you just take 2%, and I think that's probably too much, so that would be 2 points. So you'd put a stop at 173.5, something like that. But the key, John, is if you want to be really safe, wait for the stop signal to come in. In other words, the stop signal, it's going to be apparent to somebody that something is not quite right, and that to me would be a down move of more than 400 points in the Dow on any one day, a down move of more than 40 points in the S&P on any one day, and 150 points in the Nasdaq on any one day. That would really be, to me, would be the signals are go and get ready, because John, I really believe this. This market is so ripe for something nasty to happen, is when they try to go to the door to get out, that door is not going to be big enough for everybody, but maybe it's going to go up forever. But right now, there's a lot of things that are screaming, just be careful from a technical basis.
Gotcha. Thank you on that. Now the most important question of the day, Larry. First a fact, yes, Roger Babson opened Babson, what is today Babson College. I think he called it Babson Institute back in the day. I think it was 1920 or thereabouts. And, of course, Roger was from Gloucester, Mass., and opened the Institute, now the college, in Wellesley, Mass. So you're from Indiana. Where are you going to open Pesavento College, please?
It's the School of Hard Knocks, and it's in South Tucson, right next to the airport where the Mexican gangs come in. It's a very, very low entry rate, but you have to be well skilled in hand-to-hand combat. No,
well, if I could bequeath something, I'd like to put a granite marker at the entrance to the college, please.
Well, they did that to Trump, and look what they did. They chopped it up on Hollywood Boulevard, for heaven's sakes. What are you going to do? No, that's okay. I've just had a lot of fun meeting all the people that I've met through the years, John. I really, I've been able to travel to 29 different countries and meet thousands of people and make some really great friends. And there's a few people that don't like me, but what the heck, that happens to everybody. But it's been fun. I've been doing this. I never thought in a million years that I would be doing something like this. I was going to be a doctor or a pharmacist, and I just stumbled into it from the silver market. Going way back in 1964 or 63. And I was doing a little bit of trading, but it was the silver that made that made me realize that, wow, there's some serious money here. And 50,000 was serious money back in 1965. So that was, especially when you had I think the $1.25 was the minimum wage.
Indeed. Larry, thanks so much for your time. I'm going to hang up and ask if in your last segment, if you can just retell the story. I'd love to rehear how you and Tom O'Brien met, where it was, what show you guys were doing. And I have to tell you, the work you've been doing with Tom and TFNN since I think 2005 or 6, it certainly appears it's been a lot of fun.
Yeah. Well, John, we were in. It was right after 9/11. It was a February after 9/11, and they were doing the show at the Traders Expo show at the Marriott Marquis, and they were going to cancel it. But Tom and Jim, they were both my students. Jim Sugarman and Tom Borkwin were both my students, and they said, no, we're gonna gamble, and I think people are going to show up. And it was the best show they ever had. I mean, the people came from everywhere to go to this show. I don't know why it was so filled, but anyway, Tom was there, and he was visiting with the hockey players, from because he's from Boston, and they were there, and he was talking to him about Fibonacci and how much he knew about Fibonacci, and Jack said to him, he said, you ought to talk to the guy that understands Fibonacci, and Tom says, who's that? And he mentioned my name, and so they pulled me out of somewhere, and I went over and I met him and everything like that. And that's how I basically met him. And I was a guest a few times on the show, and then more and more often, because occasionally I got lucky. And then in August of in August of 2007, on August the 15th, we had that huge day that was, just the Dow was down 400 points. The Russell was up. The NASDAQ was unchanged. That was a major bottom. Then after that, Ed died, and then I took over the show. We'll be right back, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to continue on with the end of the show here. We were talking with Mr. Z about the market. I had some ideas on it. I'm going to focus on those in the newsletter over the weekend. Maybe they're right, maybe they're wrong, but I'll still be singing the same old song. Anyway, we'll keep an eye on it. Remember, tomorrow is a very, very important day because we have none other than Norman. He calls it to the minute. Winsky will be our guest, and he always has some great information. And we have this big full moon coming up here on the 26th. The 25th, of course, is the anniversary date of the stock market high in 1987 that lasted for about 2 years before we continued to go a great deal higher. So keep in mind that we do have Norm tomorrow. He's always interesting and has some great information, and we'll move on to those levels. I didn't get a chance to cover some of the things that I wanted to. Tomorrow I want to cover a few more things about Bryce Gilmore. I need to cover the hog market. I want to talk a little bit about Morgan Maxfield, one of the great speculators of the 1970s who died in a plane crash in Kansas City, I think in 1978 or 79. Lost somebody really super. I think he was 42. He was just a young fellow. Anyway, we'll cover that stuff tomorrow. So keep supporting TFNN, folks. It's a great organization. Tom and Tommy and all the group there does a super job, and we all appreciate it. And being in the den is a big help because you folks give us some really good ideas on trading. Some of them don't work, but by golly, most of them do. So if you need a place to hang out, the Tiger Den is a good place. So keep in mind, tomorrow morning is going to be Norm Winsky at 9:30, which will be good. So live every day in an attitude of gratitude, and may God bless, and have a wonderful day. And may all your positions go up that you're long, and all the positions go down that you are short. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!